Good morning, good afternoon, good day to all of you joining us. My name is Davis Sunderland. I cover sustainable energy and mobility here at Baird with my partner, Ben Kalo. We're very happy to have VP of Investor Relations, Amandae Baey here from VinFast, who's going to speak to us a little bit about the setup and the strategy for the company. We are going to do an informal fireside chat. I'll jump into questions and have some things prepared, but if you have any questions during the webcast, please feel free to email me at dsunderland@rwbaird.com, or you can use the portal here and it'll pop up on my screen as well, and then I will fold them into the conversation. Just one thing before we jump in, I want to read a brief disclosure. Please refer to the event calendar, published research, or Baird's website for important disclosures regarding the companies discussed during this event. Again, thank you very much for joining us, and thank you, Amandae, for joining us. Maybe just to kick things off, I will turn it over for you for a little bit of background about yourself, and then maybe we can jump into just an overview of VinFast and start at a high level. Thank you.
Great. Thanks, Davis. Thank you for offering to host us today. My name is Amanda. I'm the VP of Investor Relations at VinFast, based here in New York City. I joined VinFast after spending well over a decade on the sell side, specializing in Asian equities. So today it gives me a great pleasure to be representing another Asian company that's listed in the US and to share more about VinFast's story. So let me get started about a quick history about how VinFast came into being. So we started in 2017, and VinFast is actually Southeast Asia's first vertically integrated OEM. It was founded by our CEO, Mr. Pham, who is also the founder of Vingroup, the largest private conglomerate in Vietnam. Now, what is remarkable about the VinFast journey is that the company had to do everything from scratch, right? This is a country that prior to VinFast's existence did not have any auto manufacturing. So management had to actually go west in the very early days and learned from established OEMs like BMW and GM on how to actually create a car industry. So that was how VinFast started. By 2022, the company was fully committed to being all electric. We're only producing electric cars, electric motorbikes, and electric buses. We started deliveries in 2022, and a year later, we started our international expansion, beginning with the US and Europe to get the NCAP ratings. The listing in the US was a logical choice because this is the venue where all our relevant comms are listed. So today, in a span of 4 years, VinFast has one of the broadest electric mobility offerings compared to our peers. We have 15 EV models. We have about 10 electric scooters, 4 e-bus models. We also have cumulatively sold over 400,000 vehicles. We sell in 10 countries and have over 400 showrooms globally and 4 factories. And I know I said a lot in that last sentence.
No, that was a lot of numbers that I'm sure we'll dig more into. No, that's a perfect overview, and thank you for that. Just keeping things at a high level before we zone in, you mentioned the Vingroup, which is something that I think differentiates you from a lot of other manufacturers and just your place in the Vingroup. Maybe you could spend a minute just on that, other related parties, and some of the, I guess, synergies that may come with being a part of that ecosystem.
Yeah, before I address that question directly, I guess, taking a step back, I want to clarify that the conglomerate structure is a very common business structure in Asia and Latin America. Part of it is because conglomerates exist to address certain gaps in the economy. So I think that is the main difference between how businesses are done in other parts of the world versus the US, which is less familiar with conglomerates. So for VinFast specifically, we are part of Vingroup, which is the largest private conglomerate in Vietnam and accounts for our Vingroup's revenue accounts for actually about 1% of Vietnam's total GDP. So that gives you a sense of the influence that it has on the country's economic development. Now, our founder, Mr. Pham, he started Vingroup in the real estate vertical. He subsequently added other verticals, including the industrials and technology piece, which VinFast sits under. One of the benefits of being part of a much larger private parent entity is that you get to enjoy a lot of synergies with other subsidiaries. The most obvious example for us is the green mobility ecosystem. There are basically three sister companies within this ecosystem. That's VinFast, VGreen, that is an exclusive charging network for VinFast cars only, and Green Smart Mobility. GSM is a pure EV fleet operator that basically buys VinFast cars and operates them as a ride-hailing fleet. So these three companies within the broader Vingroup ecosystem have been cooperating from day one to help drive and accelerate EV adoption, not just in Vietnam, but also in neighboring Asian countries. Within the broader Vingroup ecosystem, there are also other technology companies that are still private today. A few of them are, names like VinAI and VinRobotics that are incubating new technologies that VinFast is testing either inside our cars or inside our factories.
You mentioned the three different entities kind of working together for the broader EV adoption, and maybe just to spend a few minutes and maybe a couple questions on where we're at with the EV landscape and kind of level setting on the market. Maybe could you talk just a bit about where we are with adoption in the United States, in Asia, in Europe? And I know there's obviously a lot of debate about where the most attractive areas to grow are, or coming off a smaller base in some, but maybe just to start with the overview of the markets and where we are today would be helpful.
Yeah, from our vantage point, we see a very uneven pace of growth globally. The US, much lower than parts of Asia, India, and Europe for obvious reasons. I think it's not just the regulatory environment, it's also having access to an affordable car. It's also being able to educate the consumer about range and battery anxiety. So ironically today, April 2026, the recent geopolitical events and the higher oil prices actually has also become an additional tailwind for us, especially in our core countries that we operate in, namely in Southeast Asia. We started to see a lot more interest from fleet operators looking to switch from ICE fleets to EV fleets. So yeah, broadly, going back to the question, we think the US is the most potential longer term, but in the near term, because all the changes to regulatory environment and perhaps not enough access to more affordable cars, EV adoption will be slower in the US compared to other parts of the world.
I want to go back to that tailwind that you mentioned about the higher energy prices, because I think that's very important. But maybe just first to ask a follow up on the policy, thinking about how things change seemingly every 4 years here in the United States. Could you just talk a bit about adoption trends tied to policy, either here or in other markets, maybe Europe in particular?
Yeah, so I think that in Europe specifically, they've made a very clear commitment. But I think in the past year, maybe analyst forecasts got a little too bullish about where the demand would actually settle out. But the overall policy objective in Europe has always been a lot clearer than the US. And I think in Europe, they also actively encourage that switch. They make charging accessibility a lot more available compared to the US. And I think in some ways, you can think about the way Europe is heading towards its EV adoption curve. It's slightly ahead of where emerging Asia is because the infrastructure is just more developed there, right? In other parts of the world, like emerging Asia, there is a policy, there's an overarching policy, but it might be a little slower in terms of the implementation execution because the bottleneck still is the charging network.
And then maybe going back to the comment about oil prices. And obviously the whole world has changed very dramatically in the last 5 or 6 weeks with the conflict in Iran and the impact on oil prices. But could you talk about maybe where specifically you're seeing the greatest increase in interest or maybe opportunities for EVs given this recent spike, and maybe countries that are net energy importers or any other angle you'd like to take it?
Yeah, so for us, our core Asian markets, which is besides Vietnam, our home turf, India, Indonesia, and Philippines are all net energy importers. And since the conflict started and with the spike in higher oil prices, governments of these countries have actually implemented fuel rationing. They have also encouraged consumers to work from home, reduce commutes, and all of that in a bid to basically, address the fuel shortage situation. So as a result of that, we've seen our local teams have reported seeing increased interest from not just consumers, but also fleet operators. So we expect to see more robust B2B sales activity in the coming quarters as a result of fleet operators realizing, it's more economical to run an EV taxi fleet than running a conventional ICE taxi fleet.
That makes sense, and thank you for that. So maybe just with that as the context for the EV market and some of the trends going on right now, pivoting a bit more to VinFast specifically, maybe we could start by just an overview of the product lineup, some of the different models, maybe which ones are the best selling or different ASP ranges, and then I'll jump off with a few from that. But just an overview of the products would be great.
Okay, so we have one of the broadest product portfolio amongst the newer EV brands. We have 15 EV models, a dozen two-wheelers, and 4 e-buses, right? So this actually opens up a lot more opportunities for us to sell into different use cases within a certain market. And you can think about our product portfolio as being more comparable to a legacy OEM rather than a newer startup. Within the passenger vehicle lineup, we actually have 3 brands. So we announced a brand restructuring end of last year, where we have the VinFast brand that is the most well-established. That is the VinFast brand for passenger vehicle cars. We have the Green brand, which is basically a lineup of cars that is meant for commercial fleet operations. So this includes things like a EC van or MPV for like airport pickups and stuff like that. The Green lineup is basically modifications of the existing VinFast cars, but we've taken out a lot of the bells and whistles that are not needed, so lowering the BOM cost for those. And then the last brand that we introduced is a brand called Lak Hong. This is the ultra luxury lineup that's really intended for government fleets. In terms of where the best sellers are for us, the smallest cars, the VF3 and VF5, which have an average ASP of, call it roughly 15,000 US, right? Those were our best sellers for the last few years. But what's been interesting is we've actually seen a mix shift towards the more mid-size cars. So in 2024, the VF3 and VF5 accounted for more than 60% of our deliveries. This came down to around 50% last year, while we've seen an increase in the proportion of deliveries coming from the VF6 and VF7, which are the mid-size SUVs.
Thank you for that. And maybe also just thinking about who some of your competitors in these different markets would be. I mean, I'm sure it varies greatly, but just in thinking about the VF3 and VF5, for example, I mean, are we talking about competition with Tesla Model 3, some of the cheaper Chinese brands? Anything to call out there on the competitive front would be helpful.
Yeah, so the VF3 and VF5, we're only selling in the Asian markets. The VF3, it's a mini SUV, and I guess the closest comp would be the Wuling Air, two-door SUV. The VF5 would be maybe more comparable to the more comparable ICE models would be maybe like a smaller Hyundai or Honda, and I think for the Chinese comp would be like a BYD Auto. So in Indonesia and Philippines, we definitely encounter the Chinese brands more competitively, and in India, we come up against the domestic players like Mahindra and Tata.
Sure. Okay. Maybe thinking again, just on the product portfolio and the lineup, just to, I guess, finish this thought out, but a common pushback that EVs get, especially in the United States, is just a lack of choice. There aren't that many compelling models out there, certainly at reasonable price points. Could you maybe talk just about your plans for rolling out new vehicles, acknowledging that you already have a very large portfolio, and kind of how you think about it, whether it's entering certain markets at certain price points, or if it's more from a cost perspective, or certain models being manufactured in certain locations, or however you'd like to approach it?
Yeah, so whenever we enter a new international market, we don't seek to bring the entire portfolio at once, right? I'll use India as an example. In India, we took a very deliberate strategy to start with the mid-premium cars, the VF6 and VF7. Those cars compete directly with the established players like Tata and Mahindra. And we don't just compete on price. When we think about EV, it's really about the total cost of ownership. I think when consumers go into a dealership, they look at the price tag first and they're like, oh, the EV car is more expensive than the ICE car, right? But the concept of total cost of ownership is once you buy the car, the monthly cost to top it up with fuel versus charging it with electricity, that's when you start to see the economic difference. So we spend a lot of time educating consumers on this concept of total cost of ownership and what goes into that and how we make it more attractive for consumers to consider buying EVs. We offer in different markets certain policies like a 1 year free charging program after you buy the car, or we provide residual value guarantee. That's very important because consumers are concerned about the secondhand value of the car. So policy programs like this on top with the warranties on the car and the battery, we believe that goes a long way to converting consumers into thinking like, hey, like it's not just about the initial price tag, it's about the longer term cost benefits. So going back to your point about how we choose to enter, certain markets with different models, we go in with a flagship model, we test the market, and then we identify new opportunities to bring in models that we can either choose to upsell, or maybe we're bringing a lower price model that will expand our addressable pool in that market. And I should also add that we recently announced that we are going to start producing range extender EVs. It is a type of hybrid. We view this as a practical interim step for certain markets where charging availability is, not as prevalent yet. And so we will be assessing which markets to bring range extender EVs to in the coming months.
Okay. And then maybe just the first part of that question too about where you're focusing on introducing new models, whether it be through the VinFast brand, the Green brand, the ultra luxury, if there's a focus one or the other.
The focus is really on the VinFast and the Green brand. The Green brand is basically where our B2B sales efforts is going into in markets like Indonesia and the Philippines, India. There's a lot of private taxi companies, conventional taxi companies, and through Green Smart Mobility, our sister company, they will be actively acting like a sales channel for us to target these other fleet operators to get them to buy bulk purchases of our cars under the Green brand. The VinFast brand will continue to be the passenger vehicle segment, and we've made very clear modifications. There was a need to distinguish between the two brands so that people don't get confused. And also there are different price points with different features and so on.
Okay. Maybe pivoting a little bit. So there are a few other EV startups, of course, the biggest, which is no longer a startup in the United States, being Tesla, but also just thinking about Rivian and Lucid. And I guess I don't want to load the question too much, but could you just maybe compare and contrast your strategy in the United States with some of these others, maybe legacy OEMs who are rolling out EV lineups as well, and either from a product portfolio or profitability or market share delivery trends, or again, however you'd like to take it, but just with that as context.
Yeah, so it's interesting that the US was the first market that we went international with, but today I would say that our US footprint is very small. That is by design. We had announced plans to build a factory in the US a couple of years ago. We put it on pause, and we rechanneled that capex into building other factories in India and Indonesia, where we just saw nearer term demand and more attractive market for it. So right now, the US footprint for us is very minimal. It is the core market for the likes of Rivian and Lucid. But for us, our core market is really, emerging Asia. You can think of VinFast market exposure as being ex-US, ex-China. And we're just really focused on those 4 core markets in our backyard and making sure that we get to profitability by getting scale in those markets.
Sure. Another thing, maybe just sticking on the Rivian and Lucid trend, and something else that we've observed with a lot of other EVs is pivoting more towards autonomous capabilities, whether that be in personal autonomous vehicles or fleet robo-taxi service. Mm-hmm. Could you talk maybe just a bit about your autonomous strategy?
Yeah, so we have a roadmap from level 2+ to level 4 autonomy. but we're taking a two-step approach to it. For level 2 plus and level 2 plus plus features, we are developing that in-house. What's happening at VinFast today is we are basically rolling out a new vehicle platform and a simplified EE architecture. We're moving towards domain and zonal architecture. So with less complexity in that, it also allows us to control more of the software stack in-house. So we'll be rolling out level 2 plus and level 2 plus plus in our larger cars later this year. For level 4, we've taken an approach where we want to partner with select external parties to develop this, right? I think the verdict is still out there on what is the best approach to a full level 4 car. You know, you have the LiDAR approach that is very costly, and then you have the camera-only approach, which is more cost-efficient. And so we have partnered with AutoBrains, which is an Israeli startup. And we're doing robo-taxi, robo-car trials right now in Hanoi using AutoBrains technology inside our car. So AutoBrains is basically taking a vision-only approach. They just use 6 cameras to basically run the car at a level 4 autonomy. For now, our plan is to eventually offer robo-taxi services within a geo-fenced area in Vietnam. And then we will assess whether there will be a need for greater rollout in the future.
So last question on the competitive front, and then I'll turn back to your portfolio. But also, and again, with the caveat that you just mentioned, the US is a smaller market. There have been a lot of EV companies globally, or I should say a lot of legacy companies globally, who have peeled back on their EV ambitions. Have you noticed any changes in terms with suppliers, or any tailwinds to demand, or any benefits, or I guess any negatives to, or just any changes in the market from this?
I think for us, from a supply chain perspective, the skill that we have now has put us in a better position to renegotiate certain contracts with our suppliers. We've grown our volumes exponentially over the last few years, right? We basically, in 2025, we doubled our volumes that we did in 2024. We ended 2025 with about close to 200,000 cars delivered. And for 2026, we're targeting to deliver at least 300,000 cars. So with this scale and with the company's broader ambitions to rapidly roll out its B2B sales channels, this increased volume from VinFast has only been more than advantage for us, if anything, over our suppliers. Concurrently with the new platform that we're introducing to our cars, we're moving to a more lower cost, more efficient vehicle platform. And that has also allowed us to change suppliers, basically. So to answer your question, like the pullback by other established OEMs on the EV front, it hasn't really impacted us. The reality is, we don't encounter these guys in our key markets that we're facing. If anything, we see our competitive landscape is probably more defined by Asian players, whether it's a BYD or Mahindra or Tata.
Sure. Okay. Maybe thinking about your global capacity, and this is a good segue, I guess, from the last point you were making about your core markets, but could you just give an overview of your installed vehicle manufacturing capacity, kind of where the hubs are and how that may change looking forward?
So we have 4 factories globally with a total design capacity of 600,000 cars. 500,000 of that is in Vietnam, split between 2 factories. And then 50,000 is in India, that is a CKD plant. And 50,000 in Indonesia, which is also a CKD plant. So the flagship, the fully integrated manufacturing facilities are located in Vietnam. We have one in North Vietnam in Hai Phong that is 300,000, and that is the flagship. That's a flagship facility where we have a lot of suppliers located on site or close by. A lot of tier 1 suppliers like Forvia or Anatolin that we source from. We have them close to us. So some of the models that we produce in Hai Phong have up to over 70% local content. Then the remaining 200,000 is located in central Vietnam in a province called Ha Tinh. In the central Vietnam factory, we actually have a battery pack assembly line located inside that factory. So we do assemble a certain portion of the battery packs that we need by ourselves in the Hutton factory. Right next to the Hutton factory, we have a joint venture battery cell factory with Gotion. Gotion is one of our key suppliers for batteries, and we manufacture some of the battery cells that we use in our smaller cars in this joint venture factory.
You may have answered part of my question in doing that, but maybe just thinking about why the rationale for the CKD plants versus building a fully integrated plant in India or Indonesia. Is this at all related to tax incentives or like a made local for local type program, or any thoughts on that?
It's more of a de-risk approach. I think starting with, as a new entrant, it takes time to build the supply chain locally. And even though India and Indonesia have a very established auto supply chain already present, but it does take time. So our approach is, for Indonesia specifically, to start manufacturing there and to enjoy certain tax incentives, you need to have 40% local content requirements from the get-go. That includes labor. So we start with that 40% local content, and then we will import the key things like e-motors into Indonesia. But over time, we will look to increase that local content. India doesn't have the same high local content requirements, so it's easier for us to go with a CKD approach. But over time, we want to localize more of that setup so that we can also eventually reduce costs for manufacturing in the India market.
Okay. Maybe going back, you made an interesting comment earlier, just bringing up the e-buses and the e-bikes/scooters, which is of course differentiated from many of the other EV manufacturers. I guess two questions. First, just what are the synergies or dyssynergies of manufacturing these two non-passenger EV items? And I guess I'll start with that one.
So for us, it was very important to have an electric two-wheeler offering because, in markets like Vietnam, the electric two-wheeler population is significantly higher than four-wheeler ownership, right? In fact, I'm going to take it a step further. In all four of these markets, Vietnam, India, Indonesia, and the Philippines, four-wheeler ownership is less than 10% of the population. So still very low compared to what you would think, compared to developed markets like the US, right? So because there's a much larger two-wheeler population, there was a need to have an electric two-wheeler offering. So there was, the most I think that's the most like straightforward explanation for the strategy. For electric buses, it's really about finding more opportunities to provide solutions across all modes of transportation. And buses is also one of the key forms of transportation in these markets. So it's not so much about the synergies across these products and manufacturing them, but it's more of thinking holistically, like these are our core markets and buses and two-wheelers are the main modes of transportation. We need to have an electric solution for them.
That makes sense. And that's a great carryover into my next question, which was just going to be contextualizing the volumes of the buses and the scooters or e-bikes compared to the EVs. And then maybe if you could also just talk about the mix, relatively speaking, of the EV portfolio, that would be helpful.
Yeah, so I'll start with the mix between the three product lines. Today, 90% of our revenues come from EVs, and about less than 10% e-scooters and e-buses, still very small. But looking forward over the next few years, we have very ambitious plans to also grow our two-wheeler volumes significantly. In fact, for 2026, we set a target to at least grow our two-wheeler volumes by 2.5 times what we did in 2025. So 2025, we did about 400,000 units. We want to grow that by 2.5 times this year. So call it ballpark 1 million units. And this is the first year where we're going to export our electric two-wheelers to overseas markets also. Having said that, despite the strong volume growth we expect in the two-wheeler business, we still expect the majority of our revenues to be still driven by four-wheelers. But from a profitability standpoint, we do expect two-wheelers to become profitable first before the four-wheeler segment.
Okay. And then maybe just a second point on mix within the EV portfolio. I think you mentioned earlier the VF3 and the VF5 being the highest volume. Just contextualizing those, I guess, in the rest of the portfolio.
Yeah, so the VF3 and VF5 last year accounted for about 50% of the portfolio. The mid-sized cars accounted, I'll call them the VF6, VF7, and also the Limo Green, which is the MPV version. Those three models accounted for about 25% of our total deliveries last year. For this year, we expect the VF6, VF7, and the Limo Green to account for anywhere from 30 to 40% of our total deliveries this year. And there's two main reasons for that. The VF6 and VF7 is our flagship car in India, and we do expect to continue selling well in the India market. We only launched in August last year, but we're already in the top 5 of battery EV brands within 5 months of selling in India. And additionally, the Limo Green, which is the MPV version, that is going to be the flagship car that we are selling through our B2B channels to other fleet operators. So we also expect that to contribute more volumes. As a result of this mix shift, where you have the mid-sized cars accounting for a higher proportion of our total deliveries, we are anticipating a slight ASP increase this year. Last year, our average ASP was 16,000 US. We are expecting about 10% increase this year just with this mix shift.
Okay. Maybe just looking at the prices of the portfolio, and that's another good way to tie into the financials. One of the biggest criticisms of the EVs within our coverage, and EVs broadly, has just been the difficulty ramping profitably. Maybe could you just start at a high level talking about your path to profitability, where you are, and then maybe the guidance or outlook for 2026 in that regard?
Yeah, so we have consistently said that we need to get scale first to be profitable, right? And I've mentioned that we are targeting to do at least 300,000 EVs this year. The industry benchmark of how to think about profitability is that if you reach around 2/3 of your manufacturing capacity, that is the more or less break-even point for OEM, right? So for us, it's going to be another 1.5, 2 years to get to that break-even point, and we've already explicitly mentioned that in our last earnings call. For us, what is key is we need to roll out our lower cost BOM structure. And I mentioned earlier that we are rolling out the vehicle platform 2.0 and a simplified E architecture. And this is a very significant R&D initiative for us because our simplified vehicle architecture basically means is across our 15 or so models, we're going to consolidate and have 3 or 4 main platforms. The vehicle platform is the chassis, the seats, and so on, right? We're increasing commonality amongst all these models. So it allows us to reduce components, but also increase the volume that we require and therefore gives us more bargaining power over our suppliers. So that's the main thing. This new vehicle platform will SOP later this year, along with that simplified EE architecture. With that lower BOM structure coming in, that's when we will start to see the uptick in profitability. But it's going to take time for all of this to roll off our lines. So that's why we've been loosely saying around the late 27, early 28 timeline to think about GP and EBITDA profitability.
Sure. Okay. And maybe, I guess, in the time between now and then, could you talk just a little bit about your balance sheet, capital outlook, maybe dependency on capital markets or not dependency, and just the outlook for now until then?
Right. So we have always been supported by our parent company, Vin Group, and our founder, Mr. Pham. Today, we have about 3 billion in liquidity available to us, and we continue to be financed by a combination of grants from our founder and also a mix of domestic and international debt from our various lenders. We are always assessing opportunities on the equity capital markets, but we have not seen a suitable opportunity as yet. The markets the last few years has not been the most cooperative, and our share price wasn't where we want it to be. But in the last month or so, maybe things have started to turn a little bit. I suspect part of it is investors realizing after our most recent earnings call that we've been telling a pretty consistent story, and now we're executing on our plan. I think the message is very clear. We want to get to a certain level of scale first, and then we see the profitability come through. And then who knows when would the right time to pull a broader equity offering.
Sure. Okay. Well, maybe in just these last couple minutes before we wrap up, I want to just turn again to the near-term focus. Maybe could you just talk about delivery trends, super near-term outlook? I know you mentioned the 2026 outlook or the targets for the guidance this year, but just as it relates to catalysts and other things we should be monitoring in the near term.
Aside from the EV deliveries, I think it's also important to monitor our two-wheeler deliveries. We announced a record order book for two-wheelers in Vietnam alone in March, for March. And I've mentioned earlier that we have a goal to get to roughly 1 million units this year for e-scooters. So that's one catalyst to look at. Another catalyst to pay attention to is the progress we make on the B2B sales channels. Because for us, it's not just about selling cars to the end consumers, it's also about selling cars to business fleets. So that's also another catalyst to pay attention to. I think that you should also be thinking about our market share gains in our home market. Last year, we ended 2025 with 36% market share in the Vietnam's overall auto passenger vehicle market. That 36% market share that VinFast has is basically the equivalent to 36% EV penetration in Vietnam. We've been the number one OEM for more than 12 consecutive months in our home base. And we intend to hold on to that number one position for as long as possible. At the same time, also, you can monitor our progress in our key international markets like India, Indonesia, and Philippines. The auto associations in those markets released monthly data, so you can see the volumes that we report there. I think it's progress on selling more cars in international markets, growing our market share in Vietnam, and also growing our two-wheeler deliveries.
Sure. Very nice. Okay. Well, I want to turn it over to you just for any other closing comments. And again, for those of you listening on the line, please feel free to email me or Amanda for follow-up. I'm happy to connect you afterwards. But maybe with that, I'm going to thank you for your time. And if there's anything you'd like to leave us with or last points on the VinFast story, now is the time.
Well, thank you for having us again, Davis. I think the last closing remark I will make is I think VinFast has been a bit of a misunderstood and underappreciated story for the last few years. Like I mentioned earlier, you can think of VinFast as being an ex-US, ex-China play on EV adoption. We are very focused on executing in our core markets that have the highest long-term growth potential for EV adoption. And this is supported not just by the regulatory tailwinds there, but also various socioeconomic factors there. So continue to pay attention to our execution. We have delivered on our delivery targets over the last 2 years. And so this year is another crucial year for us to deliver not just the EV target, but also our two-wheeler target, because this is the first time we're actually providing two-wheeler guidance.
Okay. Great. Well, I think we'll leave it there. Please reach out to me or Ben or Amanda with any questions. And thank you again for your time.
Thank you, Davis.